first day of the rest of the year. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update here on October 1st, 2017. So October 1st is the first day of the fourth quarter of 2017. So it's the first day of the rest of the year. And what do we have coming for the fourth quarter of this year? Boy, it's hard to tell, isn't it? We've got an ongoing bull market. I'm showing a daily chart here of the S&P 500, and last week it put in again all-time closing highs. In fact, all the indexes did. So the bull market continues. I'm pretty interested in an article that I'm reading here on Fox Business. And the question here posed in the article is, will the stock market live up to the fourth quarter's reputation for strength, written by Annika Tappe? And the author goes on to make the point that equities traditionally have had a very strong fourth quarter. Fourth quarter has gone up, and author goes on to talk about the fact that if September puts in new highs, then the probability of fourth quarter being strong has increased historically. I'm always interested in these kind of analysis, these seasonality and cycles, whether it's, historical seasonality for given quarters, given months, whether it's the Santa Claus rally in December, or the January effect, or phases of the moon, or tea leaves, or whatever. It's interesting stuff, but it can draw my attention to what may happen, and that's interesting, but my trades are always based on the reality of what is actually happening. And what is actually happening is the market put in new highs. The uptrend continues. Now, we still have this time cycle analysis that I've showed over the last couple of weeks, and it's pretty interesting. Now, in the first 6-week series, this has gone on in 6-week chunks where the market's gone up to higher highs and then down to higher lows toward the end. Now, we're getting close to the end here. The end of this current 6-week cycle is the 11th. But you can see here on the very first one, it was up to the last couple days before it pulled back to a new higher low. So this time cycle could still be in play. Again, this is interesting. It draws my attention. It's something to watch for. It's not reality. A projection of this is not reality. Reality is we're putting in new highs. But we've got a lot going on this upcoming week. We've got a lot of economic reports coming up, particularly jobs information. And pretty soon, not this upcoming week, but probably the week after that, on the 18th, Alcoa kicks off the official start to earnings season, the big major companies. So how's Q4 going to look? Well, we're getting started. We're going to find out, aren't we? And we're going to find out whether seasonality strength of Q4 continues or whether it's a statistical and cyclical anomaly and we end up getting a pullback. Impossible to project at this time. The reality is the bull market continues. We put in new highs, and of course we're trading according to that, but we're also keeping an eye on the potential for a correction after so long in a bull market. So we're trading both sides of the market. We're making profits on the uptrend. We're prepared for a correction, and even if if we get a sharp correction beginning, we'll have time. We'll have reality-based price patterns that will tell us if there's a bigger correction underway, and we'll be able to trade according to that. So we stay with the trend. It is our friend, and we continue up. We're entertained by the ideas of seasonality and historical Q4 returns and what may happen. Got a lot of Fed heads talking this week, and their words will be parsed and examined to an excruciating level of detail for sure. Janet Yellen, of course, is talking this week. The Fed said they intend to increase rates during this quarter toward the end of the year in December. So that's kind of built into price. But if the nuance of their words indicates something different, that could have unsettling effect on the market. We could see some sharp moves. So the idea is to use strict risk control, take the best trades, keep the winners big, the losers small, and take what the market gives us. I think that's the best we can do in this market and in any market conditions. Let's go ahead and take a look at gold and oil to wrap up for this week and see how they're doing. So we've been watching gold for several months and looking for a breakout above 1307. We got it. It went up pretty sharply up to about 1360. It's pulled back pretty sharply. And what's interesting is, this is still part of a uptrend, right? Higher high, so far higher low, and it's beginning to slow down, lose momentum here at the bottom of the Ichimoku cloud, which is projecting a support area. So we expect to see pretty quickly a reversal and the continuation of an uptrend in gold, and that may be very tradable. Let's get that confirmed before we just jump in, but there may be some good trades coming in gold. Oil, we were looking for a break above, 50, 51 in there. We got a nice bullish break. Now it's pulling back a little bit, but it looks like we've got a nice bullish trend beginning in oil. I remember oil is very volatile and it swings, but what we've got is big swings now. Higher high, higher low, higher high, higher low, massive new high. It could pull clear back here to the cloud and still be part of this uptrend. So let's watch this as it pulls back, and when it reverses again, there could be a really nice long trade in oil. Got to be patient, got to be disciplined, but it really, really looks like it's coming. So we don't want to jump in yet. We want to let it pull back, find some kind of support, and when it shows clear signs, a couple good solid price bars reversing again upwards, we're going to be jumping into that. So that's the update for this week. The market's always clear in the rear view mirror about what happened. Looking forward is really, really hard, but we see that we're in an uptrend in the major indexes, putting in new highs. We know a pullback's coming someday. We're going to ride the trend up. We're going to be prepared for when it turns and goes down. We don't have to be anxious about it. We use risk control on individual trades. So if they do lose, they lose small. We stay with the trends on the winners, so they're proportionately bigger. And have fun. No reason to be stressed out. Market's going to do what it's going to do. We're going to profit either way. Gold, we're looking for the trend to continue to find some support, reverse up, and the same thing for oil. Probably pull back a little bit and then take off again, and we may be trading that. So that's the outlook, and thanks for tuning in. As always, send me your questions, your comments, your feedback. I try to respond to every single one, and let's see where this goes. Take care. Thanks.